A whole year of a tragic war in Ukraine and no end in sight. But the equity market in Europe is higher than before the war broke out. What's happening here? Similarly surprising, the following chart shows that also the economic outlook for the euro area has already improved a lot over the recent months. You see the confidence of households in the European Union, and you see the optimism of companies in the European Union, and both indicators have been trending up sharply over the last months. So the same counterintuitive result. Again, what's going on here? Actually, it's quite easy to resolve this contradiction. You see here in the chart what the gas price, the price that Europe is paying for the gas imports, has done over the last 12 months. You see a sharp increase with the outbreak of the war, and the equity market, that's the second line here in the chart, has of course fallen at this time tremendously. Then recovered when the gas price came down. Last summer, the ultimate escalation, gas prices at all-time highs in the European Union, fear that we might not have enough gas over the winter, and what has happened since last autumn, it became clearer and clearer that Europe has solved its gas supply issues. The gas price has collapsed over the recent months, and hand in hand with this, companies have become now more optimistic, households as well, and the equity market has recovered. Look at the chart, the European equity index, here in this case it's the German equity index, is now already higher than at the outbreak of the war. That's what's happening usually when the economic outlook is improving. Equity markets are not waiting for an official stamp that the recession is over, that the war is over. All it usually needs for them to turn around is for the economic outlook, the future expectations for the economy to improve. And that's exactly what has happened in Europe over the last months, with the gas price coming down tremendously. So what's the consequence for our investments? First, that you must not wait for newspapers to tell you the crisis is over, the war is over. Equity markets usually already recovering by then. And while in Europe a lot of this recovery has already happened on the equity market, you see here in the chart, global equity market, a very broad sample of global companies, that at the very right part of the chart, the equity market decline from last year on a global scale has stabilized, but we are not back to the old peaks yet. So if you expect that equity markets also this time on a global scale will make up for this decline last year, this is now still the chance to buy good companies, interesting companies at a discount. For instance, by increasing a fund savings plan or simply putting more money at work in the global equity market. If you like this info, don't miss the next one. Hit the subscribe button, give us a like, and we wish you good luck and see you next time.